So you want to buy a foreclosure and you want to live in it. How do you do that? With a lack of inventory, it's hard to find a house. How about if you buy a foreclosure and fix it up? But how do you do that? Today we're going to talk with Nicholas Raimondi from Atlantic Home Capital Corp on how to buy a foreclosure to live in. I know it's not easy, but can you go through the process step by step?
There's two separate ways to do it. The first way is hard money. A lot of the houses at the auction, the foreclosures, you can only get hard money or cash, and they give you a certain amount of time to close. So for those auction properties, of course, you go into the house, 10% down, renovate it, and then you refinance out. That's the best way to do that. Or if there's a foreclosure on the market, an REO, or even a house that looks like a foreclosure and needs a ton of work, you can do a renovation loan. It could be a conventional renovation loan, FHA renovation loan. So FHA renovation loan, same thing as an FHA loan, 3.5% down, plus you get the renovation money on top. So I think we've done a few of those as well, right?
No, we haven't yet because people are afraid of 203K loans because they don't understand them and they're involved.
Yes.
So take us to the process, conventional or FHA loan, where they're going to buy the house to live in. It's not 1, 2, 3.
You find the house needs work. Most likely the listing's going to read cash or 203K or some sort of renovation loan. So you put the offer in as a renovation loan. You have a contractor go to the house and figure out what it needs.
Stop right there. You have to have a team set up in order to do this because you can't just pick up the phone and get a contract. You need to have somebody who is willing to come in and put in bids on homes and knows the process because it's a lot of paperwork for the contractor.
Right.
So they have to be willing to do it.
If the renovation is less than $5,000, you actually don't need a contractor.
Okay.
So you can get a renovation loan without a licensed contractor if you're just doing minimal things that will add up to $5,000. Now the cost of everything, it's very hard to find anything for less than $5,000.
If we go back one more step, the bank-owned properties, they actually want to sell to end users. They are not like your typical seller who wants it on the market and sold in less than 5 days. By law, in most cases, have to market the home for sometimes 30 days.
And a lot of times they'll put a deed restriction on it as well, so they make sure an investor doesn't buy it, where buy the house, you can't sell it for at least a year, or refinance it for a year.
I think by 2023, around June 2023, with the forbearance and all the backlog of the courts, that's when we're probably going to see more and more of these foreclosures that were in foreclosure before the pandemic starting to come on the market.
Right. Yeah, they're moving a lot faster now.
They are starting to come out. They're coming out in drips and drabs, but the legal part of it is that they have to try and market it. And a lot of times they come out and they say for the first 7 days or 14 days or 21 days, only owner-occupied buyers can put in an offer on these homes.
Yep.
So a lot of buyers want to get a nice, pretty house already done. If you meet an investor who's also a contractor who is kind of hungry right now because everybody is overbidding on homes and they really can't get anything, a lot of these old investors are now turned contractors and are doing these, and they don't mind the paperwork.
I see it all the time, and I get a lot of, as I know a lot of investors, so lending them the private money to do their projects. A ton of them are texting me, I do roofs now, or it needs home renovations. I've noticed that a lot.
If somebody were to call you and say, hey, I need to get estimates on getting this work done, and I'll use those people, can they go to their mortgage person and say, hey, first of all, they have to have someone who can do a 203K loan.
And I think a big part is too, a lot of people say they do 203Ks, they do renovation loans, but they've never done them. They don't know how to do them. You have to tell this, the buyer up front, the cost that there are extra costs that come along with these loans. If it's over a certain amount of the rehab budget, over $30,000 you're coming out of your pocket to pay a HUD consultant, right? And the consultant's going to review that bid to make sure that the buyer is not getting ripped off by the contractor, and to make sure the contractor is doing the appropriate work to the house that's needed to make it mortgageable and livable. And then once it's renovated, and also you have extra title costs with it as well. Because as the work is going on, they have to keep pulling title to make sure there's no mechanic liens and everything's going well with the loan. So there are some extra costs that come along with that loan.
Now, how much do you need to do 203K or renovation loan?
Well, you need 3.5% down of the purchase price plus the renovation, right? So that all-in number, that's your real purchase price, and that's what the down payment is based on. So the 3.5% down of the overall total cost. If you hire a HUD consultant, I think they're $1,200-$1,300, and then the extra title cost maybe an extra $3. So to be safe, I would say always about $4,000 to $5,000 more than a regular loan.
Okay, so it's not a huge cost. So who hires the consultant?
There's a list of the consultants.
Talk to Nick.
Yeah, I have a list. I mean, they're out there. You go online and look them up.
So that's beside your contractor.
Yeah, the contractor is completely separate.
Okay.
So with these loans, you need a licensed contractor, right? They need to provide all their information, license and the insurance, and they cannot be related to you. So there's been many times where somebody's come to me and said, I want to do a renovation loan. My dad's a contractor. Can't do it.
So you have to be careful. You have to be careful who you go to. It should be someone who you've seen their work.
Correct.
Okay. And they are the GC, the general contractor on the job. So they might have subcontractors coming in to do all the work. But they're the ones that say, so let's say the house needs everything, $100,000 worth of work. How does the 203K loan go about divvying out that money?
In draws. So you get some money up front at the closing, released directly to the contractor. And then as you go on, the contractor's in direct contact with our FHA 203K department. And as he's doing the work, he could say, I completed the roof and the siding. The inspector goes out, makes sure that everything's complete, and the money gets released, wired directly to his account to match the bid, right? So if on that bid the roof was $10,000, he completes the roof, he gets a wire for $10,000.
Okay, so now we get the $10,000. The roof is done. Does somebody come out and check to say, okay, the roof is done, let's do the next piece?
Of course, yep.
If they're dealing with someone from your office, okay, is that all a day or two?
Within a day, 24 to 48 hours.
Okay.
From request to go out to do the inspection and get the money.
So they do the roof, and then they do the burner, and then they do the walls, and they're having inspections and such.
Right.
So
well, if on that bid, if they're pulling permits for whatever it is, knocking down walls and do whatever, that's also on there. It costs money to do all that. To hire an architect if you do. So they can also get money for that. That's what we consider soft cost, like the money that you're not to knock down walls or anything, but to hire the architect and place the permits. So you can also get money for that as well.
So the contractor comes up with the budget.
But to change the structure, that's a conventional renovation loan. So that's called home style renovation. The FHA 203K, you're not supposed to change the structure.
Okay, so concentrating then on the FHA.
When you're at the closing with any FHA loan, whether a regular loan or a 203K, you sign, an affidavit stating that you're going to live in the house for at least 12 months. So you have to move into these houses. They're only for primary residences.
Will you sit down and go over step by step?
Oh yeah, of course.
How to do that?
Yeah, of course. And of course, throughout the process, there's a lot of questions. I mean, explain everything along the way. But really, it's simple. People get very scared of these loans, and they're afraid to go for it. It's simple, and I encourage people to take these loans. And on top of that, you could actually, if there's a slight appraisal gap, you're allowed to go 10% over that appraised value. The buyer really wants the house and is willing to overpay. That could potentially cover that appraisal gap, rather than come out of your pocket with it.
It's really confusing, so you need to talk to Nick at
631-428-6928. Call or text.
Putting all the information down below. Karen Roth with Remax Integrity Leaders. I'll see you soon.